I now hand it over to Mr. Nirmal Jain to start off with the finance panel. So leading our finance panel is Mr. Nirmal Jain, a visionary first-generation entrepreneur who founded IIFL Group in 1995. Under his leadership, IIFL has evolved into one of India's largest, most respectable financial services. And again, with a range of conglomerates offering a diverse range of services, including wealth management, lending, and insurance. Mr. Jain's pioneering efforts, such as launching one of India's first online trading platforms, have significantly contributed to democratize India's financial access throughout the nation. We're delighted to have you with us, Mr. Jain. Over to you. Thank you.
Thank you, but our schedule is a break before my talk, so you want to take a break or?
We're all good. We can continue.
Good morning, distinguished guests, faculty, students, and all friends. And first, I would like to thank Cambridge for inviting me for this session. It's an absolute privilege and honor to be here. So this is a place where Newton discovered gravity. And we are here to talk about a growth story which is defying gravity, India's financial landscape. So India's growth story is a sort of a paradox. While much of the developed world built physical infrastructure like road, rail, ports, bridges to drive the growth, and we'll remember Roosevelt's highways or German Autobahn or Japan's Shinkansen, the bullet train, India lagged behind in all these. Indian city grew fast, but in a very messy and chaotic manner. But here's the thing. While India lagged behind in physical infrastructure, India is leading the way in digital infrastructure. And that has completely changed the game. Take UPI, India's real-time payment processing system, which processes 14 billion transactions in a month, a lot more than Master, Visa, Amex, and all global credit card networks put together. Or Aadhaar, which is 1.3 billion people have a digital identity that connects them to the financial system. More than 700 million people in India have smartphones, and therefore even the smallest villager is connected to the digital economy. So what is at the heart of these revolutions is a very simple device, mobile. And if your mobile is, in Indian context, is not only your, is also key to your identity, your bank account, your payment, and your credit. So India's digital public infrastructure has 5 layers. The identity layer, which is Aadhaar, which is your unique biometric recognition. Then you have a payment layer, which is UPI, which is Unified Payment Interface. You just scan a QR code on your mobile and money can be transferred from one bank, your bank account, to the receiver's bank account, whoever you want to make payment. Can be a merchant, can be your child, or anybody for that matter. And then you have account aggregator, which is for data. And then you have a DigiLocker for documents. These are still building up. And then the new ones, which is ONDC for e-commerce. And then you have OCAN for credit network. Now these are just not technology platform, but they are public goods which are empowering 1 billion plus people today. So India's fintech revolution is quite like masala chai in India, which is there in billionaires' boardroom, as well as on a tea stall at the street. The cup is different, but the essence is the same. Financial service at lightning pace. When we talk about India's financial landscape, it's not only about digital payment, but it's about bold and big reforms which have been done over the last 3 decades. In 1991, India opened doors to private enterprise and global investors. This was done in the wake of an unprecedented crisis where India was running out of foreign currency. The NSE was set up, which brought technology and transparency to capital market. SEBI emerged as an independent regulator, keeping markets disciplined and investors protected. Today, the market cap of listed companies in India is more than $4 trillion, which was just about $125 billion 30 years ago. India's GDP is nearing $4 trillion again, which was $360 billion 30 years ago, and is on the way to hit $5 trillion mark soon. India's domestic saving pool also has grown very rapidly. Foreign capital keeps flowing. FPI, FDI every year have been above $30 billion each. So India is now becoming the only large-scale growth market in the world. While China faces demographic challenges as well as geopolitical uncertainty, India has youth, rising income, and a consumption-driven economy, and that is what is attracting capital. So on top of that also we have low oil prices and supply chain shift, a world which is hungry for stable and democratic alternative. These are all strengthening India's position in the world. And let's not forget the demonstrated resilience that India has shown, which was in the Asian crisis, in the dot-com bust, in 2008 meltdown, in COVID, and very recently in the Trump's tariff tantrum. From every storm, India has come out stronger. Now, as I stand here at Cambridge, it's fascinating to see that India's financial landscape, every aspect of it connects back to this place. Let's start with the Keynes, a great economist who was part of the founding members of the RBI, but it's what he preached in terms of whether the government should intervene whenever there's a crisis is what RBI and Government of India have done very well. He also suggested that you should build public goods, which in today's context are like UPI, Aadhaar, account aggregator, ONDC, etc. And there also this quirky story of a computer lab here in Cambridge in 1991 when a few researchers wanted to know if there was coffee in the pot downstairs without getting up from their chairs. And so they set up a camera which was connected to their computers, and that created the world's first webcam. And today the same idea, which is real-time video access, is powering India's digital KYC, fraud detection, and instant credit approval. What started as a hack to see a coffee pot is helping Lata Bain in a remote village to get credit in minutes for her paper-making venture or whatever it be. Or the ARM processor, which was again designed by Sophie Wilson here in Cambridge. The tiny chip powers 95% of world's smartphones, including 700 million in India. Every tap, every transaction, and that's ARM at work. Or iris recognition, which is the colored part of the eye, which was again pioneered by John Dogman here at Cambridge. And that algorithm is the backbone of Aadhaar's biometric system, which verifies identity of 1.3 billion people uniquely and accurately every time. Let me share my own story, which is a small dot in the India's financial landscape. Back in 1995, when the internet was still a curiosity in India, we took a leap of faith and founded IFL. We were a small research firm that were selling printed reports. But when we saw where the world was going, we made a bold bet and we put all our research online for free. Overnight, our website became the most popular website in the financial services space. And then we launched 5paisa, which was an online trading platform with real-time streaming codes, instant order confirmation, but most interestingly, had a brokerage rate of 5 basis points, which is a colloquial 5paisa in India, when the brokerage rate used to be something like 100, 150 basis points. So we survived the dot-com bust, rode the market boom, and grew into a diversified financial services company spanning wealth, credit, and investment banking. Today we are betting on AI because we believe the next chapter of India's financial story will be written with AI at its core. But maybe the most exciting part is still ahead of us. For entrepreneurs, India is a playground for innovation, and for investors, India will always look richly valued, maybe more, even expensive. But you know what? It has been that way for decades. and investors who stayed the course have done well, and the future looks as bright, if not brighter. The question is not whether, but how quickly we together will seize this moment to build a more inclusive, tech-driven and resilient India. So the opportunity is here and the time is now, so let's build the future together. Thank you, and I'm looking forward to the maybe a Q&A session. I think the previous speaker did not have Q&A, but Saran told me that keep your speech to 10 minutes so we can have, we can take questions.
Thank you, Mr. Jain, for a more insightful session. It was eye-opening and we learned a lot from the session. Now we move on to the Q&A part of it. First, I'll have a few questions for Mr. Jain. I know that you also have a lot of questions. I'll start off with 2 questions, then I'll open up to the panel, to the audience, and you can go ahead. Mr. Jain, you described that UPI as India's Uber movement for payments, transformative and grassroots transformative. What in your view is the next big Uber movement waiting to happen in India?
So, I think I think the next few things which will is account aggregator, and I'll just try to explain to you very simply that as I said that India, everybody has a unique mobile number connected with Aadhaar. Of course, there's a process to change the mobile number, so people don't have, even when they change the instrument or the service. So, you know, typically, imagine this, that a tea store or a hawker or a vendor is a very uneducated person, and he wants to avail credit. Then in the mobile phone, he can access a website or a portal in the local language, and just checkbox to give access to his bank statement or payment data, or in case he's big enough to have a GST or income tax record. And the prospective lender can get the data electronically. You don't need to verify because data is already coming from the government sources. And the credit can be processed in absolutely no time. Also DigiLocker, which ultimately will have, say, your education record, medical record, your land records, your bank records, your tax records, all in digital format, all connected with your unique identity. These are the revolutionary things. The ONDC, which again is a open e-commerce platform which government is supporting. So you really don't have to be at the mercy of course, the Flipkart or the Amazon, but they can build. So it's very unique where e-commerce can be provided where anybody can be onboarded, a merchant or a grocery store, similarly the transport or a freight or a courier service, and the customer. And they will have their own rating. So I think these are okay, and again for a credit assessment, I think again it's a very, very standard protocol which lenders, the lending service providers and the borrowers will have to follow. So these are major changes, and I think the impact will be really revolutionary.
Thank you so much. Next up, I'll have one more question and I'll open up to the
Yes, sure.
audience.
This is audible or? Okay. If I'm audible, I don't need this then. I'm loud actually. Okay, fine.
With regards to the cryptocurrency, India's regulation has always been on the cautious side. Initially, they completely banned it, and then finally they opened up. But then we have a lot of capital gain tax in that end, and then transaction tax as well up to 1%. And right now, do you think that that trend will continue, or we'll kind of pivot into something that US is doing right now, where they are pushing it really hard for the cryptocurrency?
I think I would say that India's stance has been quite prudent and good, because on one hand is innovation, and on the other hand you are creating money out of thin air, and it can be speculative and very risky. So the US stance has changed after Trump has taken and his children are involved, and there can be a lot of other issues associated with that. So I think India is taking a cautious path. They don't want, and many times actually the young and youth, they can be lured into this, whose savings are meager, and they want to make I mean, they just get carried away by gambling just like a video game, and they can lose a lot of money. At the same time, it's a new currency order, it can be innovative. So I think there has to be a very robust regulatory framework before we allow this to happen. And that is evolving world over. Nobody really is very clear that how ultimately you want to regulate, because there can be new currencies and like a lot of speculative thing behind, there's a lot of opaque way in which the system works. So therefore, I think India is cautious while they're watching. They just don't want to throw it away because it can be a big innovation. And at the same time, they don't want to jump into it because it can be very risky and speculative.
Thank you. We'll open.
First of all, thank you for your
Thank you.
insights, Mr. Jain. My name is Nirmal. I am a last year MBA graduate. We spoke earlier as well. My question to you is regarding the deep tech startup ecosystem in India, and for the context where I'm coming from, I see startups happening here in Cambridge, in the Silicon Valley, which are like really hardware-driven deep tech, not just digital startups. Do you think finance is one of the key bottlenecks in such ecosystem evolving in India, or do you see some other problems, or do you see this landscape changing over a period of time in India? What is your view on this?
The finance, you mean the availability of capital?
Availability of capital is what I mean.
I think availability of capital has improved significantly. And in all these startups, the mortality rate will be higher, and therefore you will put together your pitch in a very strong way, because for investors, unless you are very sure what is the deep tech and what is your core competency to get into that domain, and what is the problem that you are trying to solve, capital availability now is fairly good. I mean, it's, of course, it can't really compete with Silicon Valley in terms of the pace at which and the quantum of money that can be available, but I think it's improved a lot.
Right. And if I can just ask a follow-up.
We had funded through our fintech fund 1 or 2, and I think it's very interesting. But the problem with this space is that where do you want to focus on? So is it an academic interest, or you are trying to solve a customer's problem? Because from an investor's point of view, they would try to see that what is the problem that you're trying to solve, not only your own domain, and whether that matches with your domain skills.
Right. And quick follow-up question is, what will it take to be, let's say, to become like a Silicon Valley of India? Let's say, for example, Bangalore is better than Silicon Valley. What will it take in your view?
Time. It keeps compounding the size, so you can't do it overnight. See, India is $4 trillion economy, US is I think 27, so it's just going to take time. It's not something that you can catch up in a hurry.
Thank you.
Hi, my name is Mehnaz. I'm the Equality, Diversity and Inclusion Manager at the Business School. My question is more about the first point you made, and then also Dr. Lal's point about the innovation and the acceleration of technological innovation in finance, for example. My question is about, well, you've mentioned everybody from large corporations to stalls can use platforms to make payments. This is going to increase, the advancement is going to increase rapidly. How is India's education sector going to make sure that people, especially in rural areas where resources are limited, are able to access that technology, and they have the skills to access that technology? And my question, it's more about, there's predictions that technological advances, they're going to basically create a bigger divide between the rich and poor. So where's India's role in making sure that this does not happen?
That's a very interesting question, good question, and it can be debated at length, but my views are as follows, and my views may differ from many others. I think the divide, instead of technology causing the divide, technology is solving the problem. So if you really look at the way AI, generative AI and everything is progressing, they're making it simpler and simpler for even an uneducated person to access technology. So, it's the technology that is making it easier rather than you have to go and do maybe 30 years ago, you have to be really computer science educated, IT educated to really understand and get into technology. Today, there are children who are far better than people like us at using technology. And education is one space which is ripe for a very revolutionary change by AI, which really can mass customize the education, the learning content process. And I'm very optimistic on the way this sector will be revolutionized. One. Two, and as I spoke about even account aggregator and all the things that are happening in India and how they are being accessed by very poor people or bottom of the pyramid is all being facilitated by technology. Yeah.
All right, so thank you so much, sir. My name is Rhythm. I'm a student at the Faculty of Economics. So the questions, so you spoke about portfolio inflows in the country. I wanted to ask you about the risks that come with it. And in particular, I guess you would know, Jain Street, for example, had Jain Street, which is this quant hedge fund, had the most profitable arm of like 3 traders last 2 years coming out of India, where in fact the biggest risks were from the retail traders, like the counterparties were retail traders. Now my question is that when very heavy quant heavy firms who have very high amount of information tend to trade in India, and they would have certain medium-term inflows, do you think brokers, broker-dealers are actually positioned well to make sure that the risks that retail traders face are adhered to? In particular, loss of capital, loss of margins. Many of them actually take debt on, from external money lenders. So, what are certain processes or safeguarding mechanisms that you see as broker-dealers in mind? And also maybe shining a bit of light on the financial literacy aspect as well, because that's also very important, which has been lacking.
Thank you. So you are right, equity has risk, and risk cannot be taken out of equity. As a result, you need to invest in government securities, which in India is 6%, because that is the risk we take. Everything else is risky. And it is also given that young people get carried away and drawn into equity, derivative, and risk. And a lot of work is happening in financial literacy by regulators, by broker dealers, and by many other organizations as well. But what happens is there are many anecdotal stories about somebody losing a lot of money in equity or retail investors, which is like can't afford and lost money, and that's true. But we don't see the other side of it, the positive impact that equities are creating. There's a risk capital which is driving the economic growth. There's a risk capital which is driving so many private businesses and creating so many jobs. Sometimes I take analogy of a road transport. In India, about 300 people get killed in road transport every day. But nobody says we have shut it down or just do something which is like really going to affect this. Although we want to make roads safer and safer. But in the heart of heart, we accept it that the economic benefit that road transport brings is more valuable than 100,000 lives a year. That is hard value of life. Similarly, these equities and they will have risk. You can't take away overnight, at least we don't know the formula for that, and we try and make sure that they get mitigated, investors get educated. But the huge benefit of it also, that many people who are allocated prudently and invested in mutual fund over 20-30 years have really multiplied wealth, they improve their lifestyle, living standard, as well as their family's future. Businesses have got money. So there are both sides of a coin. But yes, a lot of work has to happen on this, just like it has to happen on road safety. It has to happen in the equity and in the financial literacy.
Yeah, thank you, Jain sir. Just a follow-up question, what Sir was asking about the cryptocurrencies. How the tokenization will impact the financial sector in India, and how the good part of the blockchain or the tokenization can be beneficial for a country like India, who is adapting to the new changes and the world's best digital economy, we can say. So how the specific to tokenization can help the financial sector in India?
So, cryptocurrency should not be confused with blockchain technology, because blockchain technology has much wider use, like with SME financing and also the tokenization, which will digitize any physical assets and also allow them to be traded or transacted in a fragmented basis, so that there can be mass and a larger participation. So cryptocurrency is not the technology, but is an application of technology, and the technology by itself has tremendous utility and wider applications. These things are a bit distinct. They should not be seen as like sort of integral to each other.
Mr. Jain, while you're talking about the new age technology, cryptocurrency, I have a question on AI. Recently, banks and fintechs are increasingly using AI to underwrite securities or underwrite investments or premium for that matter. So, how do you think that AI will change the finance world as well? And what do you think the main side of things?
No, I think the question is very valid that AI will change and make it automated. And at least in the near future, I'm not audible to that.
It's on. I think it's just rubbing against the palm of your hand. The mic. No. Sorry, just hit.
So the human side is not going to go away. And obviously, like say my business, what we try to do is a phygital model where, AI is assisting human beings rather than replacing them. Or at least at this stage of technological evolution, we don't see it replacing very quickly. And, many times, like supposing in a credit to a small customer, you may have a default and there can be a technology-driven model to take certain legal or recovery action, but a person sitting at the branch might see that the person has faced a tragedy, which can be a simple illness or a casualty. So there are many aspects of this, and there, of course, one has to probably look at both the things together, and the human side will always remain an integral part of the business.
But for the next generation of entrepreneurs, next generation of finance people, what is the advice that you would give in terms of AI? Because we feel that even in equity research, we have few classes here at Cambridge where we have one of the professors from Harvard and MIT who come and give their sessions, and they say that about AI, they can find out equity using equity research, they'll be able to find out which stock will go up and down daily. So with this happening at this pace, how do you think that the next generation of entrepreneurs and finance people can move ahead with that?
No, they can use AI. So there are many things that earlier human beings used to do. If machine can do it, then you can do better things and more things. Okay, so earlier people used to carry goods on their back. People used to have the horse cart, which will take a lot more human effort, or washing machines. They came. Everything has taken away human labor. So AI is also going to make things simpler, and automatically, I think it's by default human beings will discover more and more innovative things and better things to do. So, the young generation of entrepreneur, only thing I say is that, you should not be complacent. And more so after initial success, because the rules of the game will keep changing. And it's not about AI alone. I think the way the technology is changing and the pace at which it has started changing and the way the world is so dynamic that you should always be paranoid, always be on your feet and never be complacent. You might have some success and you become complacent and you might lose everything and you won't know what really overtook you.
Mr. Jain, thanks for that. That was fascinating. You talked about India's development through capital markets, and you've seen the journey since the 1990s. I was just curious your views on how that could be a model for other developing countries in Asia or Africa, just given that, I'll be honest, in some of the Western world, we're moving away from capitalism with tariffs and things like that.
So there are many good models in the world. Singapore has a unique model. China also grew very rapidly in the last 30 years. South Korea has done phenomenally well. And every model has, some positives or some lessons, some takeaways. I think India's unique feature is at scale. To do something with 1.3 billion people and the legacy of poor infrastructure and the beliefs and the orthodox and lots of religion, and a democratic setup where things aren't easy to do is incredible. To come to very specifics, the technology which is Aadhaar or the UPI, they are very easily exportable, and they are something that can be, that can have a revolutionary foundation for revolutionary changes in finance, changes in medical, changes in technology, education. Once you have that, I think once you have a unique identity which is biometric, cannot be fudged, like today in India, you can walk with your facial recognition into most of the airports. You don't need a boarding pass, you don't need anything else. So it's a matter of time that your face is, so it's not only that you're going paperless, you go cardless, you just don't have to carry anything actually. So that way the adoption of technology at scale is something that many countries can take, and the digital stack that I talked about is absolutely something which is, which can be exported with benefit to both.
We have time for one final question.
Sri Jain, thank you so much. You've seen our recent derivative exposure of a leading bank happening. So what's your advice there? How can we control the risk and so that the financial sector becomes more prudent for the risks which are associated with it?
It's a good question. It can be, many times solutions are simpler. Like in Indian context, if you say that, that there's something which in regulator has to accept it, sometimes there are political pressures. Don't allow anybody with, say, less than, at least say 200,000 rupees of cash margin. The idea is that, or just like alternate investment fund where the regulatory oversight is lighter, they want minimum 1 crore rupees or 1 crore rupees will be what, like 200,000 or maybe $150,000 of minimum investment. That itself takes out the smaller people out of the speculative game. And people are rich and wealthy, they are supposed to hire the right counsel. They can't come and say that I was stupid and this told me that you'll make so much of money, and you got carried away, because I think that's a very simpler solution to this.
Thank you.
Yes, sir. One last
question.
So you talk about account aggregators in India. And do you think that in India we will also go with the open banking concepts that we have in UK and European countries? So customers have more power to shift and basically.
I think Renault is also trying to, they've been really innovative and work very well. And they are trying to set up something in India. But India already, this open architecture has been done by a company called Open, where we had some alliance, and there are other companies. So they are simplifying, and a customer can open account with any bank. So they're integrating with almost, say, 20 top banks. So that is already in place. I think it's just a matter of time that it gets adopted and becomes widespread. Thank you so much.
Thank you, Mr. Jain, and I would like to thank all our esteemed speakers for being present here with us today, and it has been an absolute honor to hear from all of you, and I'm sure all of us present here will be taking back a lot with us with the wealth of the knowledge that you have shared with us. Thank you so much.